next call then. PNB Housing Finance is in focus. Disbursements were up about 13.5% sequentially, but that did not translate into very strong AUM growth. Write-offs did aid NPA improvement. During the conference call, PNB Housing also said that it expects the second half of the year to be better. Girish Kousgi, MD and CEO of PNB Housing Finance, is with us. Mr. Kousgi, thank you for joining in, and season's greetings to you. So let's first start with the AUM trends. Can you tell us, give us some color on how the quarter played out and what you're expecting in terms of AUM growth for the second half?
Good morning, Sumri. In fact, if you look at the last 1 year, we've been trying to transform the company. We've changed the business model. So if you have to talk about 1 year back, the growth used to be little negative or almost flat. So if you have to compare that with the Q2 on a YOY, the book growth was 12% and disbursement was 18%. So I always say that, it will start with disbursement and then the catch-up happens on the book. So this year we have guided 17% growth on book. So we will catch up in Q3 and Q4. I think our guidance is in line. So I think it was a very good quarter. We were able to reduce the GNPA both on retail and corporate. Margins were maintained. A good growth in revenue, in net interest income, PAT. I think all the parameters played out very well for us in Q2. It was a great quarter.
You said 17%, 17% AUM growth target for the current year?
Yeah.
Okay, and you're confident of achieving that, going forward?
Yeah, as of last quarter end, we were at 12% growth on book. So we need to catch up 5%. So in next 2 quarters, that's Q3 and Q4, we would get to 17% growth on book.
Got it. Hi, good morning, Mr. Kousgi, and thanks so much for joining in. Well, some on the street believe that maybe you're a little bit aggressive in terms of your target, but we take that point. You are believing that 70% is possible. So maybe by the end of this year, you'll be closer to that number. The other aspect is, you're looking to restart your corporate segment, right, in the next few quarters. As of now, it's relatively small, and that's been a bit of a pain point. So could you tell us what could this segment contribute, and what is the growth you're forecasting there?
I think now our focus is completely on retail, so much so that we launched affordable business called Roshni about a year back. I think now it's almost close to 1 year that we have opened 100 branches. And in the next 4 months, we'll be opening 60 more branches on the affordable and 27 branches on the prime side. So currently we have 100 on prime, 100 on Roshni. So this 200 will go to 287 in next 4 months. So we are pretty much aggressive on retail, and affordable is really gaining good traction. As of September end, we reached to a book of close to 750 crores. And probably, hopefully, this quarter we should be able to hit 1,000, and we'll be one of the fastest, housing finance companies to reach the first 1,000 AUM. Now, on corporate, it was a conscious call to degrow the book because we saw some stress because of certain calls which were taken in the past. So we have corrected that. We worked on resolution. We ran down the book from almost 18,000 crores to about less than 2,400 crores as of last quarter end. And the GNP also has come down. So we have planned to start, which is about 2-3 quarters away from now. But when we start corporate, it will be in a very small way, in a different format. Focus would be on only construction finance, focusing on select developers, select projects in select cities. I think that's a plan. So if we look at the overall portfolio, at any given point in time, the corporate book would be less than 10%. And the rest would be retail, which would be again a split of prime and affordable.
Okay, so corporate book would be under 10%. Focus is on retail, and maybe what you will focus on the corporate side is basically construction finance, etc., as you said. On the branches, you said in the next 1 year you will get up to 287. You said, right? You're at 200
before March, another 87 branches in next 4 to 4.5 months.
Got that. And 60 out of that, the new branches on the affordable side. Got it. Mr. Kousgi, just talk to us about NIM. Spreads came off in the quarter. Cost of funds were higher. Are you still maintaining that 3.5% NIM guidance for the full year? And how will you get to it? What's the mix in terms of cost of funds?
So actually, if you look at our spread and NIM, it's around 2.6 and NIM is about 3.9, 3.95. Even last quarter, NIM was 3.95. So I think it should be, on similar lines for next few quarters. However, the long-term guidance, on spread is 2.5 and NIM is about 3.5. I think that is sustainable. Today, if you look at, we are 45 bips higher on NIMs. I think next few quarters we'll be able to maintain that. In terms of cost of funds, I think it is coming down marginally. For last quarter on portfolio, it was 7.99 and incrementally also was almost similar. And going forward, we expect the cost of funds to come down because of 2-3 reasons. We have been engaging with all the bankers to reprice the rates on the lower side. And this year onwards, we'll have access to NHB funds, which will come at cheaper rate. And depending on the performance, we've been engaging with rating agencies. Couple of agencies have revised the outlook, and we are expecting a possible upgrade in next couple of quarters. So all these things will bring down the cost.
Okay, all right, Mr. Koski, final question before we let you go. Tell us about the asset quality. How do you see that panning out? If you could give us a couple of numbers and credit cost as well.
So in terms of asset quality on the corporate side, we are more or less done because now it's less than 3%. We have one account in NPA, which is 68 crores. And we are working on resolution, hopefully should get resolved before March. So on corporate, our GNPA would probably be nil by March. On the retail side, we've been pretty aggressive on various legal tools, including cash collection. So I would only say that we're really doing a great job in terms of containing the flows. So every quarter, we would see that GNPA on retail would keep coming down. There is no guidance for that, but in next probably 3 to 4 quarters, our GNPA at an enterprise level would be comparable with some of the best companies in the industry. On credit cost, this year we had guided for 60 bips. Quarter 1 was 36 bips and quarter 2 was 26 bips. I think largely 36 bips and 26 bips was for ECL true-up. We wanted to really increase the PCR, but in terms of actual credit cost, it has been much, much lower than that. So this year, the guidance remains at 60 bips. From coming year onwards, it will be 40 bips.
Okay, Mr. Koski, we'll leave it there, sir. Thank you very much for joining us and running us through all of that detail. Good luck as you continue to drive that business and drive that turn. Well, 190 points on the Nifty is